This is Carl with the three things I'm watching for Monday, September 29th. Starting out, want to touch up. We had the cold storage report come out Friday, and this is likely going to give us a little bit more support in that livestock complex moving forward. I'm going to say a little bit more on pork, and this is pork. We've seen some, hogs have been running here, putting in new contract highs, and I did not see anything in this cold storage report that would indicate we're going to see those soften. Total red meat in the supplies in the United States down 2%. At the end of August, down 7% from a year ago. The beef supply down 1% on the month, up 2% on the year ago, though. So we're seeing a little bit of a build there. Pork, though, down 3% on the month, down 13% on the year. The hog numbers declining. We just, our exports remain strong. China continues to buy U.S. pork, even though they're culling out their own hog herd or going to start. So our pork demand not letting up with high prices. Doubt if it'll support the entire complex, but wondering when we're going to see a setback in hogs. And even though we're overbought and sitting at the top side of the trading ranges here, doesn't look like we're going to see a major sell-off coming. Another thing I want to point out here is we have some trade relations, and we're talking, we've talked a lot with China about the tariffs going on, but we have to remember we have a fee coming up, $50 per metric ton on grain that's loaded out on Chinese vessels, Chinese owned vessels, Chinese built vessels, you name it. That is set to take effect here in October. Along with tariffs, that's just one more fee that we have to overcome for our exports here. And another reason that our soybean sales continue to struggle. It isn't that we have, a lack of demand for our soybeans. Yes, we're seeing competition out of South America, but the problem is we keep shooting ourselves in the own foot. We just keep putting these charges on and these taxes and these fees, and countries just can't afford to do business with us right now. That's a major hangup. The third and final thing I want to bring up, and I talked about this a little bit last week to a few people, and I put it on social media, but if I was a cash buyer in the interior market right now, or an exporter, anybody, and I was looking at a market, we got depressed futures, we got a farmer that's disengaged, really doesn't want to sell that much, and now President Trump is talking about maybe handing out another subsidy to U.S. farmers to make up for his slow exports program that we have. That would be horrendous for the cash buyers. If I was a cash buyer and didn't have coverage and this was coming out, I would be panicking. Farmers can use cash if they can use subsidies for cash flows. They're not going to make cash sales into the market. That's just not going to happen, especially during harvest. If they don't have to, they're not going to market it. And this year, even more so. So let's keep an eye on that. I think your basis is going to react accordingly. If these subsidies even get hinted a little stronger that they're coming on, I think you'll see the cash market react accordingly. Those are the three things I'm watching today.